Well, thanks so much for joining us for this edition of Making Sense, where we talk about our finances, our financial institutions, the current trends, and really what's on the horizon as well. We're joined by Justin Wolf from Forest Area Federal Credit Union. Justin, thanks so much for joining us. All right, today's topic has to do with preparing our kids, kind of our kids, regardless of their age. Some of them could be a little bit older, preparing them for a solid financial future. Justin, thanks so much for joining us. All right, so how early is too early to start talking to our kids about money?
It's never too early, right? And each family and each kid or youth are going to be a little bit different when they're ready to start grasping some of these concepts. So it is going to be different for everyone, but that doesn't mean that it's never too early to get started and start thinking about and talking with your youth about, okay, what's appropriate for them at their age and or their maturity level. Because, the sooner you start the conversation and then build on it over time, the more we're going to be able to help the youth, whether it's in our families or that they're coming to the bank or credit union for this advice, or their school teachers or whoever their trusted people might be. Have the conversation, introduce the conversation. Frankly, you want to put an age on it. As soon as they can start to comprehend, 5 years old isn't too soon to start talking about how things have value and how there are costs associated with things. And yeah, you are going to tailor that conversation with a 5-year-old differently than you will a 15-year-old. But having the conversation is the first step.
Absolutely. And some of those concepts about saving and that things cost money, those are important conversations to have with a 5-year-old of, well, why can't we go to Disney World on Saturday? So sometimes those conversations come up at a much younger age. And again, if it's appropriate, the way that you address it can be so important and can set those kids on a path. So what kinds of accounts are offered by banks and credit unions when it comes to our kids? Maybe a little bit older, but maybe you could start an account at a young age. What kind of offerings do you offer to our younger customers?
Yeah. You can get started in so many places. The nuts and bolts of the accounts are generally the same, but many banks and credit unions will have accounts that are specifically for younger people. And generally, just out of the gate, while many institutions have accounts for people of all ages with no fees, for example, your youth account, your young people account, those are always going to be generally, of course, fee-free. And they usually come with some additional benefit to help get that young person jump-started. It might be a matching deposit. It might be this or that. But really go in and ask your local bank or credit union what they offer, because there's going to be an account and there's going to have those things available to you. But basically, it starts with a savings account, right? Okay. And a lot of times a bank and a credit union, they'll call that savings account something special, kind of make it at least a little bit exciting for that young person opening their first account. And usually comes with, a little toolkit, a little help along the way. I remember long ago when I was little, one of the things my mom did with us was we would return pop cans at the grocery store. The grocery store had a bank the bank was in the grocery store. This was back before we had the automated machines too. So I had to put the cans in the 12-pack box, buy the brand type. And anyway, that deposit money, I would take it up with they called it a passbook at the time.
Yes.
I get it punched. And, that's where I got to see my savings start to grow. That's just one way that my mom got me started. So it's usually, these banks and credit unions, we're going to have things like that so that we can make it an event or an activity rather than work. So many of us, that are in the workforce, it's banking's just another thing we have to do, right? But we make it a little bit fun and make it an event for the children and the youth so that they can become familiar with it and hopefully really grab hold of the concepts.
Well, and get them on that right path, get them used to putting a little bit in the savings and not just all of it being spent. Those are good traits that serve us well as adults too. And the earlier you can start that, probably the better. Because we all wish that there were things that we learned in high school. I've yet to use algebra in my day-to-day, but there are some skills like that you're like, boy, I wish we learned how to do that, or it had some basic financial lessons. So it may be up to the parents to start early with the kids with that. All right. So you talked about a basic savings account. Let's advance the age, I assume, a little bit. When do we start looking at maybe our kids having access to maybe a checking account? When does that kind of, how do we evaluate that?
Absolutely. It's really when they're ready to start taking the responsibility for those funds coming into and going out of the account, right? Now,
Right.
generally speaking, until they're 18 for a checking account, we're going to have a parent or guardian involved on that account, right? As ultimate oversight. But absolutely, somebody under 18 can have a checking account with a debit card attached. And as long as they have that parent or guardian there to help monitor their activity, and take legal responsibility for the account. It's going to be different ages for different people in our communities as our youth start to mature. But I mean, we were just talking internally here a couple of weeks ago how we saw actually just one of our communities saw an uptick in new accounts for young people right around that 16-year age mark. They were getting their first job. So, I mean, of course, for some of these, it was their first bank account and they were 16. We could argue, oh, well, you could get started sooner, but just taking that step and getting started. And when getting that first job, you have to put gas in the tank, a few other expenses, and if a little entertainment, it's a great time to get started and talk about the responsibility that goes along with it, as well as the convenience.
Well, and it may not be a bad thing if you have a couple of years with that parental supervision at 16, 17, at 18, they can probably make their own decisions. But to have a little bit of a safety net from a parent checking in on an account, overseeing an account while they figure out finances in life may not be a bad thing. So it's maybe not a bad thing to start looking at it at 16 or so and still have that parental oversight from a parent standpoint. That might make a lot of sense.
Yes, and there's so many tools available out in the marketplace to help parents and guardians monitor, limit transactions, and have safeguards in there. So that that I mean, everything from potential misuse by the youth, to the fraud that's happening all around us. And we've talked about fraud in other segments, but helping protect that young person and their account and the money they have in that is important also. And through our mobile phones, the mobile apps, the technology, there's a lot you can do in the financial sector to help your youth, help your kids get started on that journey, and keep an eye on them also, and put some safeguards in place.
Well, anybody who has an 18-year-old at home has probably noticed when they go to their mailbox, they get an awful lot of credit card offers. As soon as they get into that system, I'm going through my mailbox all the time and being like, nope. You're getting those. So how do we talk to especially our 18-year-olds about credit cards? And is that an important conversation to have? Because they're going to get the offers.
Absolutely. And it's all about responsible spending. To me, I find it beneficial to talk about wants versus needs in life. And then if you're going to utilize a credit card or a loan to make a purchase and borrow that money, what is the plan? And the plan ideally will be more than I just want this thing right now. The plan is, okay, I want this, and this is a tool to get it. And here's my plan for ultimately repaying that debt and being responsible with it. Because the number of credit card offers, while they can be a good and valuable tool, too many, too much, and too much too quickly can really get a young person in trouble. So having a plan and having some of that background knowledge and foresight to plan this out, rather than just taking advantage of every offer that comes in the mailbox or comes across our device screens, right? I mean, it's not just you can get credit card offers and have credit in 3 clicks these days. So it's important not to go overboard.
All right, I'm gonna push pause on this. So if we're at home right now and you've got a young person who is starting to navigate this and you don't really know what to tell them, is this the kind of thing that a parent and that young person can come into a financial institution and ask silly questions about, like, we shouldn't be ashamed to come talk to you folks about what we should or shouldn't be doing, right? That's what. Okay.
Come on in and see us. Come on, go into your trusted bank or credit union. Everybody in those buildings is there ready to help. We're ready to do it over the telephone. We're ready to do it over face-to-face interfaces. Many credit unions and banks are doing that in this space. So the only dumb question is one that isn't asked, right? Because I'll fast forward here, but it's like buying a house for the first time. Maybe we do a lot of home loan transactions here, but for so many of the people that we're working with, it's the first time. It's brand new to them, and they need guidance through that. It's the same thing with getting a young person involved in saving and learning how to use banking tools to conduct everyday transactions. You have to start with asking the question or asking for help, and or financial institutions reaching out in different ways, offering that help and that information so we can get the conversation started. And the last thing we want is any person at a young age to get involved in banking transactions and find themselves lost. Yeah. And then maybe find themselves a little bit behind where they thought they were going to be because somebody didn't take the opportunity to talk to them about it for as little as 10 minutes and just run through the basics and ask what more can we do and help you with.
Those literally can be expensive lessons to learn.
Yes.
Like literally. All right. So we've had these conversations, we've raised our kids up, and they've been in tune in all of this. Something that we hear all the time that adults should have, but probably not enough American adults do have that. And that's an emergency fund. Is that a concept that we should start talking to with our kids, even at a young age, even if their savings or checking account isn't overloaded? Is that a concept that we should talk to our kids about?
Absolutely. Get them prepared for that, because the need for that emergency fund, rainy day fund, extra funds on hand is only going to grow as we grow as individuals with age. And a great way to start that and just start the concept is to make a savings plan, right? Help your young person say, they want this, I'll say shiny new skateboard and that shiny new skateboard's $100 and allowance is only $2 a week, or mowing the lawns is only bringing in $10 a week, whatever it is. Make that plan, put it down on paper, or at least just talk about it. Okay, the want is $100. Here's what it takes to get there. Okay, and you help them quantify it that way. Just like teaching a young person, you're going to the store to buy a gallon of milk. How much does it cost? How much money are you going to have to take with you? Help them set that savings plan. And then once they see it in action, because they're engaged, because we're often talking about that want or that need that we're saving up for. Once they get that concept down and they see that, because now they've saved the money, they bought the shiny new skateboard. Right. Now we can transition that conversation over to an emergency fund, a rainy day fund, and why that's important, because things are going to come up. The skateboard might blow a wheel out and you have to go buy a replacement. You want to be able to go buy that replacement. You don't want to have to wait 3 weeks or however long it takes to save that money up again. So starting with the simple concepts and then building on them is a great way to keep that conversation moving over time.
And for a lot of our young people that may not really have, when we think as adults of an emergency fund, we're thinking of transmissions and refrigerators and things like that. The young people may not have as much of an emergency need. The value of the concept of having that money set aside for nothing in particular is probably more valuable than actually having the emergency account. It's having that concept of untouchable money unless X, Y, or Z.
Yeah, build the habit. Once we build habits and then we keep up with them, they become easier to manage as time goes on. So creating a habit.
The hardest, right? That first step is the really tough one. How do we help our kids create a budget? We've talked about it, wants and needs and things like that, but how do we instill in that in our young people?
Yeah. Have the conversations, get the pen and paper out at home, talk through a budget, talk about through what expenses are, make it relevant to them at where they're at in life and what their age is. If that's just not something that parents and guardians are ready to do, or just feel that they're not going to be effective at it, come to your bank or credit union. We can help with that. We'll sit down and do that exact same thing. And now's the time I want to give a couple of little shout outs here, because there's a number of wonderful programs across the nation. There's two in particular that come to mind for me that if people haven't heard about them, I just want the name to be familiar. One is Junior Achievement. Junior Achievement is a financial literacy program that is being offered in many of our area schools. And I've had the good fortune to be part of Junior Achievement as a volunteer at different times over my career. And, they need to be invited into the school. And it's usually, there's curriculums for all grade levels, and it's really engaging for the kids. Junior Achievement, this national program, they provide all the curriculum, and oftentimes financial institutions provide the volunteers to deliver the concepts and deliver the learning. And it's that financial literacy, if we can get it into the schools and then help share it with our customers and our members, we're willing to do that. So that's one program I love getting into the schools, and Junior Achievement is a way to do that. So parents, if you're ever hearing about Junior Achievement coming to your school, I'm here to tell you I'm a proponent of it. There's good stuff there. Another thing we're doing locally in our credit union is going into the schools in a slightly different way. We're going in with a reality fair, and this reality fair we aim at usually to the high school aged students, and we go in and take over for a few hours and set up booths and have all of our signage and everything. And we start by having the students pick a career, and then they're assigned a level of income and all this. And then they go and select housing and transportation and food and entertainment and clothing and all of this stuff. And they have to work through their budget, and we help them and we counsel them right on site with how they're doing. And we've been into a number of our community schools here in Northern Michigan throughout this year and last year doing that. We're looking forward to partnering with our local schools again to do the same thing in the next school year. So, in Northern Michigan here, read your school newsletters and see what's available out there. If there's not something in terms of financial literacy at your school, reach out to your local bank or credit union or Junior Achievement on the internet and see if you can be part of getting it started. And if I can help a school get involved in one of those two programs or any of the other programs that are out there, Bonsai is the name of another one. Okay. These are generally all nonprofit driven, but curriculum based with the right people. Right. Making sure the content and curriculum is age appropriate and those types of things. I'll get you the links for all the credentials, another time if anybody's interested. But that's where we feel we can maybe help get some of the largest reach. And many of our colleagues at other banks and credit unions are doing the same thing. So we're here to help, and we're here to do it as a team effort.
And a shameless plug for Junior Achievement. They've been doing this for a long time. They've figured out how to do this right. Yes. They know what resonates with young people and exactly how to market these concepts and these lessons learned, and they do it in a great way. So I'm in complete agreement with that. All right. Back to our kids. We have talked in these segments, and every adult probably knows just how important that credit score is. When should we start being concerned or start talking to our kids about building a credit score? And are there things they can do at a young age to get themselves on a correct path?
Yeah, another one of those things. It's never too early to get started, but probably going to be in your older age range. Probably 12 might be about the youngest that you're going to get started with something like that, up into the 16-year age. But to get them thinking about it. Now, credit report activity actually isn't going to occur for a young person until they turn 18. Okay. So, but but setting those habits early, talking about it early, so that when they turn 18, they don't make huge mistakes, right?
Right.
Is important. The other thing you can do is you can get your youth that are under 18 involved in borrowing transactions before they turn 18. Of course, parent or guardian is going to have to be part of that. Some lenders have their own specific rules about that. There is an opportunity to backfill some credit information once they turn 18.
Okay.
It's the credit bureau stuff can get a little bit tricky, but I have sometimes people will make an effort at doing that, but certainly once they turn 18, talk with your bank and credit union and have those good habits ready to go, so that we have good results for them as they go forward.
It really sounds like, Justin, that at about 18, things can get real, and
Yes,
they can get real dangerous. They can get because it's a lot of opportunities. There's a lot of freedom, and so really have these conversations and start these habits and this understanding at a much younger age. So when they do hit 18, it's not like the first time behind the wheel of a car at 16, like they already have some miles under the tires, if you will. And these are not all new concepts. They kind of understand what happens when they turn 18 with their finances.
yes, yep. Let's help them be prepared.
So start early. And when your kids come home with that newsletter, or start to around the dinner table, mention that there was this presentation at school today about junior achievement, or about a financial institution coming into school, pay attention and get them involved.
That's right.
All right. So it's really not that overwhelming. And there are people here to help parents that may not know what to do, which is an awful lot of us. We can go talk to our financial institution, and there are people there that this is not their first rodeo. They know where our children and their money should be going, right?
That's right.
All right, good take home message, Justin. I can't thank you enough for sharing this information. And for everyone out there, you heard Justin. Go check out Junior Achievement, and if it's not available at your school, ask somebody why, and then make it available. Is that right, Justin?
That's right. That's right. Sometimes we have to push for those things, and more often than not, these school districts and educators are well on board with that process.
Yeah.
They like to see those things in the classroom also.
Well, it's one of those life skills that you will literally come back to for the rest of your life. So, Justin, thank you so much for your time today.
Yes, thank you, and have a great evening to all the viewers.
Take care.
Bye.
Bye.